Hi everyone, it's Don, Bag of Don. It is Wednesday, October 12th at about 7:30 p.m. The markets were fairly choppy today, seemed to be on hold. We had the Fed minutes. We thought we might see a little bit of action. We saw a little bit, but nothing much. And the markets seem to be poised for something. And the next catalyst that could, it's not going to impact what we do or change any of this view tonight, but it could serve as a catalyst for a little more market volatility, and that is the CPI number, a consumer price inflation number, that'll come out tomorrow at 8:30. Now, I think the number is already known by the powers to be, the big hedge funds, the big banks. They already know what they're going to do, it's probably baked in. And they got it mapped out what they're going to do. Now, what that is and how they're going to react and exactly, I never know. Nobody ever really does unless you're in the know, and we're not. We're not in the club. So we just, use the tools that we have. We're not following a narrative or trying to identify narratives at all. We're not. I'm not going to get into what it means and what it doesn't mean and what the Fed's going to do and not going to do. That is all pointless. What we're doing here is tracking money flow. And we want to understand if there is something, if there is an event, if there is an announcement that's going to impact money flow, it might indicate or hint as to what kind of strategy to run. Tomorrow, during that time frame, I will be running a most likely point and figure, probably the chipper or HFT2, something along those lines, and then look for a trend to maybe reestablish itself later in the day. That's the thought. Now, let's get into our daily view of the markets. And we come here as we do each and every. Let's look at the traditional view and what do we see? Now, I think this is the VIX, right? Yeah, this is the VIX. And we don't have enough time to describe. We've been describing it the last couple of days. But this is the true high in the VIX right here. That's the true high. But we went higher, and this %B did not. We go into great detail in this also during the Q School. This is telling us that the VIX, that this is a false high and that the VIX is going to come in. If the VIX is going to come in, then we know that the S&P is going to go up. And let's look at the S&P and what do we see here? And this is really, really interesting. This, as this was here, but this is a true low back here. And we went lower and the %B did not. And we cautioned everybody that this was a false low, and we jammed higher, and we even gapped higher, and everyone's like, that's it, that's it. And then we come right back down, and we take out that low, and we go even lower. But look at the %B. We're not even back to here or here. This low, and what we do is a false low. It's false. Now, tomorrow, the markets could go lower. What we're looking for is that day where the markets don't go lower and take out the previous day's high. And it could be tomorrow, or it could be but we're within a couple of days of that. This setup where we're taking out the low and not taking it out here, this is a bullish setup for a bounce. And it could be a vicious bounce. We could come all the way back up to 4,000 right up into Thanksgiving and maybe even higher, and for only to come back later. But that's what this looks like to us. Okay, so we're a little bit at odds because you say, well, Don, no, wait a minute. Nicholas is short. Yes, he is. The VIX is long. Yes, it is. So that doesn't favor the bulls. That doesn't favor this thesis. It doesn't. But the skew is not that. It's not a real bearish skew. So we take that into account. And then I'm describing something that I've done a number of times, even back here with other members, and our other members know this technique. We can even do this intraday. This can be a very strong technique to get in front of it. If we do rally, if you say, well, I want to wait for Nicholas and I want to wait, that's okay. Because if we do rally, the likelihood is that Nicholas will pick up on it, and so won't the swing machine, and it'd only be a miss of a day or two. But when I was seeing this, I decided to get a little bit of risk, a proportionate amount using options preparing myself for a rally. And I gave myself plenty of time. I can always close it out. We don't get it tomorrow, maybe I close them out. Make sense? All right. Now we come here. This is our favorite little view of the S&P. This is a Renko chart. These are the little sell dots and the little buy dots. And you can see we haven't had but one little buy dot here, and it failed. And here we sit. This is it. That's the line in the sand. We break that and close below that, and we do that tomorrow. Friday's probably going to be bad, and Monday's probably going to be even worse. I hope it doesn't happen. If this holds and we can come bouncing up and it holds, and we take out this 3650 area, 3660, we could rally very, very quickly right up to 3811, and we could do that by Friday. We really could, and just light off. I'm not making a bullish narrative case about anything, about the Fed and inflation and yada yada, or earnings or any of that. Nothing. I'm just saying technically that's the way it looks to us. And we'll see how it plays out. The narratives, again, will be picked by the media and, the powers to be. Those things don't make us any money at all. So you kind of want to know that, know where we're coming from, and you want to just get in the zone. So with that, we're going to say good night and good luck to everybody. The markets are most certainly in a bear market. Bear markets can have vicious bull rallies. Some of the biggest bull rallies happen in bear markets. We're right on the cusp here. Nicholas is short. The VIX is fearful. The VIX is short. The skew is saying, nah, not so fast, boys. We could have a snapback. And the percent B is telling us we're likely to have a snapback, that we're likely not going to break. So it's a little conflicted. We'd need a big catalyst, a big negative shock, a surprise on some front. Now I say it could be the CPI. You never know. It could be some other world event, something else. Just know that the markets are in a precarious spot. If they can hold this and weather it and get a good bounce, then I think we could get a nice technical bounce where all those people who bought puts will close those puts, maybe even get long, and the broker dealers have to do what? They have to also close their shorts, and they have to buy stock. And it's purely a function of markets, and not people, but institutions with billions and billions of dollars trying to extract, as crazy as this is, cash flow, value out of the market. That's all it is. Good night. Good luck to everybody. New folks, welcome. Don't hesitate to send us a market you want us to look at, a stock you want us to look at on any given night. Any questions, you can email us. And we welcome the newest folks, and hope to maybe see you in the Q School one day. Best of luck, everybody. We'll see you. Let's just double check here. It feels like a Friday to me, but it isn't. So it's only Wednesday. So we'll be back tomorrow night. Then we take off for the weekend, and then we're back on Sunday. That's our schedule. Good luck, everybody.